Welcome to Dollars and Cents, Creating Your Fulfilled Life with Nicole Romito from Private Vista. In this podcast, we draw from years of experience as well as guest specialists to help you create the life you imagine. Join us in this journey as we enlighten and empower you to align your lifestyle to help you achieve your goals with a clear picture of your future. Now, let's get to the show.
And welcome to the Dollars and Cents podcast with your host, Nicole Romito. Nicole, I love seeing you every time we get together. How are you?
I'm doing okay. We're in the middle of a polar vortex here in Chicago, so happy to be in the studio where the heat is working.
We have that same polar vortex here in New Jersey, and I'm freezing. But one of your guests today is not, so we all get to be envious of that person.
Well, I would say yes and no, because we're going to be certainly talking about other hooks that Mother Nature throws us, due to weather and due to climate change. So joining me in studio today, I have Courtney Eber and Tyler Banks. Welcome to both of you.
Thank you for having us.
Thank you.
No, my pleasure. And before I'll share with our audience what we're going to talk about, and then I will also share a brief bio for each of you. But in all seriousness, we are going to be talking about climate change and just how kind of Mother Nature and weather is packing more severe and more frequent punches to many parts of the United States, certainly in the world. But we are going to focus on the United States here for our conversation. And even as we're recording today, and as Bill alluded to, one of our guests, Tyler, actually lives in California. I know and was telling us about the impact of the fires just to him personally and his loved ones. So Tyler, welcome. And again, thank you for joining us, especially what's going on in your neck of the woods. Before we get into our conversation, I want to give a brief background on each of you for our audience. I'll start with Courtney. Courtney Eber is a vice president at Alliant Private Client. As part of the private client team, she manages the insurance needs of affluent individuals and families who require a sophisticated approach to personal risk management. She is responsible for partnering with colleagues and advisors to bring a holistic approach to their joint clients' personal insurance needs. She has extensive experience designing and delivering customized risk management solutions to her clients, and her product and carrier knowledge, as well as a well-honed consulting solution, are really a powerful addition to the private client team. I can personally vouch for that, as she has worked with many of our clients at Private Vista to help them understand what's the best insurance solution tailored to their personal situation. Also joining us, as I mentioned, is Tyler Banks. Tyler is an executive vice president within the private client division of Alliant Insurance Services. And they too, of course, he's in the same group, serving the same type of clients, affluent individuals, multi-generational families who are looking for and really need a sophisticated approach to their personal risk management. He works closely with the managing director and other key members of the executive team to strategically identify and pursue both the short-term and long-term opportunities for the company and their clients overall. As with Courtney, a long and illustrious career in the insurance industry. And that is kind of highlighted by the fact he's served on several national advisory councils and is currently serving on the National Agency Council for Cincinnati Insurance. So with that, why don't we, since I just gave a little background kind of on, who you guys work with and what you do, but it might be a good place to start with just sharing a brief overview of some of the services that's offered by your private client team.
Well, Nicole, thank you so much for the kind introductions. We're thrilled to be here. And as you said, our private client group at Alliant our goal is to work alongside other advisors, to work with families, family offices, successful individuals, to make sure that they're properly served by their insurance programs, that they understand the coverage they have. We are a broker. We work with several different insurance companies to find the right solution. And we're a specialty group. So, we build a team around our clients. So if somebody has private aviation needs, yacht, fine art, farm and ranch, we have specialists that are really so ingrained in those fields that we bring onto the team to help build the right program for our clients. We also find it very important that we're there and hold their hand when they do go through a claim situation. So we are very proud of our internal claims team at Alliant. We employ a nice group of people that will get involved from the moment a claim happens so that we can make sure a claim goes smoothly as possible, that the coverage that they client should receive, is given to them. And I think that's a really, when the rubber hits the road, a really important part of what we do.
And this is Tyler Banks. I'm actually sitting in our downtown Los Angeles office. As we speak, over my shoulder, you can't see it, but is the Hollywood sign, and behind the Hollywood sign is an active wildfire. Oh. So insurance is one of those things that when you need insurance, when you're about to experience a loss or you've experienced a loss. And unfortunately, the time to review and look at your insurance policy isn't after you've just experienced a loss, as a lot of people are finding out, unfortunately, here in Southern California due to the recent wildfires. So I mean, our industry, a lot of people view it as a necessary evil. It's become very commoditized. Everyone's looking at saving 15% in 15 minutes or less, right? And that's not the way to approach insurance, because insurance is there to help you get back on your feet after you experience a loss. And we're going to see, as a postmortem after we review what's happened here in Southern California, and even these polar vortexes, we're going to see the people that had the right coverage, the right policies with the right carriers, and those that did not, because they're going to be able to rebuild their homes and get their lives back quicker. So as people navigate their insurance programs, it's just very important that they speak to their insurance broker to talk about what they have. I've had more inquiries in the last 2 weeks on, do I have enough insurance? Is wildfire covered in my insurance? If I need to evacuate because of a wildfire, do I have coverage for a hotel room? These are things that people never paid attention to before. And all of a sudden we, in our industry, it's like, boy, we went from dud to stud overnight. I'm everyone's best friend. Everyone wants to talk about insurance all of a sudden. And it's not a sexy industry. I get it, but It's very important. It's very important in the financial world, because without insurance, most people would not be able to rebuild their lives back.
Yeah, those are all excellent points. And I know we're going to unpack or go into detail on a few of those. And I think, Tyler, you just kind of teed up one of the questions I have for both of you is maybe we kind of go into what are the insurance companies doing? I know I was reading some things that maybe things in the past that might have been here's a few suggestions that could reduce your premium are now becoming mandates. So the insurance company is kind of helping just prevent the loss from the get-go. So that'd be one thing to do. Maybe some incentivizing of homeowners to want to implement other preventative measures. And I know you, especially with the news and social media, a lot of things that are focused on there are, my premiums have gone up, 300% over the last few years. I can't even afford my premiums. Or, what are some approaches to maybe looking at insurance a different way, where I think historically people have said, I just want to try and transfer as much or all of the risk to the insurance company. So I think that might be a good topic for you and Courtney to weigh in on some of the things you're seeing or the insurance companies you're working with are doing.
Yeah. I'll hop in on the kind of risk mitigation is what we call it, and I'll leave the second half for Tyler. But you're right, Nicole. In the old days, there might be a requirement of a central station fire burglar alarm, and that was about it. But nowadays, the insurance companies are really looking at what can we do for loss prevention to stop a loss from happening. And we're seeing that become not a suggestion as much anymore as a requirement. So new into our industry is about, I would say, probably 5 years or so, are automatic water shutoff valves. This is a valve that goes on the main water line coming to your home. If there's irregular flow of water, it'll automatically shut it off. Water's actually the largest cause of loss in insurance. So this is a way that you might have a loss, or water might run an hour and a half if a pipe breaks and you're out of town, but you're not going to have a week-long water flowing through your home. So really awesome tools that we can suggest and recommend and sometimes have be required for clients, but really can help in the long run alleviate a terrible loss from happening. So you're absolutely right that we're seeing that really kind of across the country as far as different types of things that are going to be required, especially in wildfire zones. Defensible space around your home, protection of eaves because of flying embers. So this is a conversation we bring up all the time, and now it's a very standard conversation with our clients. We actually even employ currently two, we were the first brokerage to do so, loss control specialists within our private client team. That's historically been very common in the commercial insurance space, that you'd have people that could come and help you prepare what can we do to not have a loss. But we've brought people onto our team to help our clients as they may be building a new home or find themselves with a beautiful home in the middle of a forest. What can we do to proactively help them and give them advice on the front end so we can help mitigate a loss on the back?
Yeah, which I think, is a win-win, right? I mean, clearly it saves the insurance company money, but people buy insurance with at least property and casualty insurance. You buy that with the hope that you never need it. So I would think if I'm buying that home in the middle of the forest, I'd rather know what can I do now or ahead of time to either avoid or materially reduce what my potential loss could be.
Absolutely.
And Nicole, I'll jump in here because I just watched a video. Someone had in the office here.
Mm-hmm.
They were on the beach and they were showing all these beachfront homes, one standing amongst probably 20 to 30 homes that have burnt down.
Oh my God.
And how many clients have I spoke to? It's like, why do I need fire insurance? I'm surrounded by an ocean.
Right.
And they, unfortunately, their home was burnt due to these most recent wildfires here in Pacific Palisades. It was interesting. The home that was standing was a concrete home, right? Where the homes that surrounded them were wood frame. And we see the same thing in Florida, right? After a hurricane, I believe Hurricane Andrews is really the hurricane that changed the landscape of Florida, and the understanding is that we need to change the building codes. So we're no longer building these stick frames that is going to get blown over every single time a hurricane comes through, but a better construction plan around, let's build these homes that are structurally going to withstand a Category 4, Category 5 hurricane. And I do think that the positive that will come out of these recent catastrophes is an improvement in building codes. So I think now there's going to be an eye towards building with materials that are fire resistant, better structurally enabled to withstand a wildfire. Sprinkler systems in event of a wildfire, so it can deploy some moisture around your home to prevent embers from getting up, and a lot of these homes burnt from the inside out. So ways to be able to prevent this from happening in the future is going to be a byproduct of what's recently occurred. But you did bring up something, Nicole, earlier about, wow, I'm going to have, my insurance has gone up so much.
Right.
And I hate to be a buzzkill here, but you ain't seen nothing yet. I mean,
oh dear.
Unfortunately, premiums are going to be more today than they were yesterday, and they're going to be more tomorrow than they are today. And that's a fact of inflation, right? I know in your business, we talk a lot about inflation and what inflation means for consumers. Well, there's a trickle-down effect of inflation into insurance as well, because insurance is all about replacing things. And when the cost of replacing those things increase double digits, well, that falls on the insurance carriers. And so they're paying out higher claims than they normally would have before. And as a result, people's insurance is going to increase in cost. I saw a recent statistic that 70% of the wealthiest people in the United States live in 4 states: New York, Florida, Texas, and California. Well, those just happen to be 4 states where they have massive catastrophic exposures, right? And you guys talked about your polar vortex there in the Northeast. New York gets that. We have hurricanes in Florida. We have a lot of convective storms and flooding and icing that happens in Texas and California. We get it all. I mean, we got wildfires, we have earthquakes. We have, we've even had a hurricane a few years ago. So, we get it all. So as a byproduct of that, insurance is going to transition from making a claim due to a loss to let's reserve insurance for those catastrophic losses, higher deductibles, right? So I retain a little bit more risk on the bottom end. So if I have a loss of say $2,000, $5,000, I pay for it myself. But let's reserve insurance for those large losses, like a total fire loss. Let's say you get a water loss, you need to replace some tiles or some flooring, which can be very expensive. Let's reserve insurance for those larger losses and not make the smaller claims. And I think that's where I think our industry is going to probably evolve over the next couple of years.
Something has to change, right? We can't just keep doing the same thing and expecting different results. What other approaches are you seeing maybe that have either been in existence on the commercial side or just are brand new to the industry in general because of, the severity and the frequency both keep increasing here? So I know you talked about maybe taking a higher deductible, so the amount you're on the hook for is higher, but it makes it more affordable. Is there any other maybe solutions that are coming up or you've seen or are starting to be talked about?
I mean, Courtney touched on quite a few of those with the technology improvements that have happened in our industry. There's been a lot of investment in preventative measures.
Right.
So, there's things you can plug into your wall, an item called a ting that will monitor the flow of electricity in your home. And if it sees that you're getting a surge or what have you, it will shut off the electricity and inform you. And that way you can prevent a potential electricity surge in your home. Right. And we're starting to see moisture sensors around the home. So whether it's around the water heater or the ice maker or your refrigerator, or your dishwasher or your washing machine, these sensors will now let you know if you have a leak so you can get to it quicker and not let these claims stop, because vast majority of your claims are still water losses. Right. So how do we prevent a water loss? And Courtney even touched on an automatic water shutoff valve. So this monitors the water flow in your home. And if it sees that you are maybe potentially having a leak or you're having a huge outflow of water, it will automatically shut off the water in the entire home. Now, if you have all your college kids at home for the holidays and they're all taking a shower at the same time, it will also trigger it to shut off with that as well. But as a preventative measure, especially a lot of our clients have second homes, right? They have vacation homes that they're not frequenting very often. And those secondary homes, especially when it's not monitored on a regular basis, the investment in protecting your home, we're going to see a massive increase in our industry and clients looking to prevent losses from happening. And Courtney, I think you had a couple other items too.
Yeah, I was just going to say, kind of in the same vein too, what are we seeing? High deductibles. There's also been a real shift in special deductibles for certain types of losses, specifically wind and hail. You and I are in Chicago. The Midwest has had a incredible amount of more severe hailstorms and more frequent hailstorms. And unfortunately, there's some fraud that goes along with these storms. Oftentimes, roofers that come around and people put in claims that maybe shouldn't have been put in, or, an old roof that really should have been maintained anyway, out of the homeowner's pocket. And the insurance companies are basically saying, back to Tyler mentioning self-insurance, you have to take more of that risk onto yourself. So a lot of our clients are seeing in their renewals this year, this is a change in the terms. And you thought you were, regular deductible applied, but now there's going to be a special percent deductible for your wind and hail claims. And that's just the new reality that we're living in. And I think Tyler would probably agree that's just going to be across the board. Standard insurance, more of the high net worth insurance, everybody's going to go to making people be more responsible for their roofs.
And I also mentioned, because up until now, we've been talking about property insurance, right? Because that's the physical assets that we have. There's also, we're starting to see a massive increase around liability exposure as well. Fortunately / unfortunately, we live in a country that's very sue happy, right? You can sue anyone at any time for any reason. And we're starting to see what we call these nuclear verdicts, which means that the jury is going to punish an individual with these outrageous sums that, unless they have insurance, comes out of their own pocket. So liability insurance, we're starting to see an increase in the cost of liability insurance, and we're starting to see exclusions in liability insurance. So if you're active in social media, if you're active in politics, we are starting to see limitations in liability policies for those types of acts. And that's something that people need to be aware that as we continue to expose ourselves online with what we're saying and what we're doing, that some of those things have repercussions. We've had clients that have been sued for making a review of a contractor. It's like this contractor did a poor job on replacing my roof. They put it in writing. They even maybe went onto social media and said something, and they got sued for that, for libel and slander for that client. And that unfortunately, for our clients, they end up having to pay hundreds of thousands of dollars to settle that claim.
Was it a false statement though?
Doesn't matter whether it was false or not. If my personal experience was, yeah, that was a very bad experience.
Right.
And I want to put that in writing into my homeowners association, which has a weekly newsletter. Mm-hmm. And then that contractor gets that, they will sue you for slander. And what unfortunately happens is it's cheaper to settle a claim.
Yeah, I know that.
Versus going to a trial and hoping that you get a right jury or what have you that has your best interest at heart. So as a way to avoid a lawsuit, a lot of times these are just settled out of court. Mm-hmm. And all of these things have, a cost impact onto that. And that is your insurance policy and the cost of insurance. And I'm to be honest, everyone's posting anything they want right now online without an understanding that if you say something about someone else or about a company, that you could potentially exposing yourself unnecessarily to a liability lawsuit.
And to just quickly plug what you do at Private Vista, and which we find with a lot of the people that we partner with and, our core group of advisors, if you're not bringing up people's umbrella coverage and liability coverage to them, it's no one at the cocktail party on Saturday is talking about their insurance policies, hopefully. So, if people don't know what they have and people don't understand why and what the risks they are. And, I know you and I have worked many times with people, and the reason we're doing a review of their insurance is because you feel that they're unadequately protected. So, that's a lot of when we do our kind of complimentary reviews of people's coverage, that's a big conversation we have with people.
Right.
What it means, why they need to have it. We actually created a website called whatsmyliability.com. And it takes you through about 10 questions to make people start to think about where they might have risk in their life. Some people at life stages, you have a teenage drivers, that's going to give you a higher risk exposure than maybe if you're in your retirement years. But it helps to kind of give a ballpark of where people should think that their liability coverage should be. There's no black or white, unfortunately, right answer to that question, but the companies that we use in our group, they're very used to writing very healthy liability limits for the clients because, their net worth and assets are, make it so that's what they should have.
Right. And I think it's even understanding how the umbrella or excess liability works to make sure that your underlying policies I know that was something I learned about when I got my first umbrella policy, is they're like, well, what are the underlying liabilities of your home and car insurance to make sure that you have those correct amounts? So kind of going back to the point Tyler made at the beginning, is you don't want to be like reviewing and just starting to understand your coverage during the time of a claim.
I mean, Nicole, it happens a lot, unfortunately. I was just talking to an attorney who says, hey, my client just hit someone who was riding their bicycle on the side of the street. Can I get an umbrella policy? Too late, right?
Right.
But how many times do you see distracted driving?
Yeah.
Everyone's distracted. Everyone's doing everything but driving their cars these days.
But kind of everyone, Tyler, the bikers, the walkers, no one's aware of where they are.
No one's paying attention.
Right.
Everyone's got their head in their phone.
Yep.
Not paying attention. And we're starting to see an increase in this distracted driving causing, auto losses. And unfortunately, they're also, hitting pedestrians or, people that are riding their bicycle, and all this has repercussions. So and again, I don't want to be fear mongering here, but this does happen. And unfortunately, it happens on a daily basis.
No, agreed. I think it's just about being aware. insurance, as I think both of you have said, it's not the most exciting topic. And it's probably something that people, I think they wait for the premium, and then it just goes up so much. Then you dedicate a Saturday afternoon to shopping it around. But it's just such a different world now than it was, 10, 15, 20 years ago. So maybe even if either of you or both of you want to speak to, the difference between there's insurance company names we all know, everybody would know, they advertise, that's how many people are insured. We're not certainly disparaging them, but maybe even just kind of some of the differences or compare and contrast of like, maybe this might be better with how do you know when you've graduated, if you will?
Do you want me to take it, Tyler?
Sure. Yeah, take that one.
Okay. So you're right. There's, there are companies, we would call them more standard insurance companies. They can write mass amounts of people across this country and sometimes do it well and have a great claims process. And, we always hope for that to be the outcome. But there's contractual differences that set apart the companies that we work with primarily in our private client group. Just little things like guaranteed replacement of your house. So you have a limit on your insurance policy. What if at the time it's not enough to rebuild? If you have a standard contract with, more of the higher level of insurance company, they're going to rebuild no matter what. A standard policy will say we'll rebuild with similar construction. Well, if you've put custom cabinets into your kitchen, you don't want the best Home Depot has to offer. You want your custom cabinets put right back there like they were. And those are sometimes pieces of a contract that people just aren't familiar with and they don't know exist, and they get caught understanding it too late during a claim. Water backup losses are big here in Chicago, where the sewage system gets backed up and there's water coming in your basement, the drain, the toilet. A standard policy has $10,000 to cover that kind of a loss. And when you have to rip up carpet and drywall and built-in cabinets in a basement, 10,000 isn't cutting it. So that's on the home side. There's agreed value, original manufactured parts on the auto side. So that's why we feel it's important that if you have, assets that, are finer assets that really deserve to be protected and rebuilt if need be the way that they are, you've probably kind of outgrown more of the standard coverage, and it's a good time to have a look and see if there might be something that gives you more comprehensive coverage.
Yeah, Nicole, I would say that, it's similar to your client base. When do they graduate from, their college buddy who is managing their investment portfolio to having a real sophisticated portfolio manager and someone that they can talk to about their investment strategy and their long-term goals. Mm-hmm. At some point when you create wealth, you expose yourself. And as you create wealth, you start acquiring assets. And when people acquire assets, unfortunately, they're kind of piecemealing their insurance program together. I bought a lake house. I'll talk to the local, real estate broker and they'll get me a policy. I just bought a new boat. Well, I'll go to the boat broker and then they'll give me an insurance policy. I'll buy ATVs. I'll buy some snowmobiles. I want an RV and then we want to buy another vacation home. So when I see people acquiring multiple $1 million plus properties, there's very little coordination behind the scenes. And as a result, most clients are very inefficient in their insurance spending. So we like to do what you do, which is bring it all in-house. Let's review, you're looking at their checking account, their 401k, their IRA, and you try and consolidate it so you can get some efficiencies and make sure that they're not reinvesting in the exact same, portfolios and get a little bit better spread of risk. And we're the same way. We want to bring it under one house, make sure that they're getting one company that's going to cover all of their assets, and that we're making sure that the minimums for their home and their auto meets the requirements for the umbrella policy. So these are things that we do with successful individuals. And like I said, the time to review your insurance policy isn't after a loss. The opportunity to do that is before the loss, so that when you do have the loss, you can rebuild your home and your life the way it was before. And, that's why our industry, the insurance industry, plays such an important component in our overall, economic, United States economy. Because without insurance, people are stuck and they have to rebuild their lives from the starting point again.
Good. All right. So I think one last thing before we wrap up is when, and I understand each situation is unique, but when might people consider either self-insuring, either a portion of the risk or, I don't know if you'd ever want to fully self-insure, but what are your thoughts or any suggestions on that topic?
So good you brought that up. This is also a conversation we're having more and more frequently these days. When it comes to homeowners insurance, if you have a mortgage, you're generally required to have full coverage. If you're in Florida, you need to have wind coverage. So you can't really get around that. But for clients that are wealthy or don't have a mortgage, and we lay out the numbers basically and show them this is what it would look like if we insure with wind, which is where a bulk of the premium is going to lie. Here's having no wind and taking that on as self-insurance. And I have a client in Sanibel with just liability on his house because we laid the numbers out and he felt his money was best served in the market investments and that he would take that risk, which unfortunately he had to pay out for with a hurricane. But it was worth it when he saw the numbers. So it's a conversation that definitely is something we discuss. Often the financial advisors are involved in that conversation as well. And needs to be something someone weighs in certain circumstances. For the most part, people still want to have insurance. So I wouldn't say it's the most common thing these days yet, but it's certainly happening more and more frequently.
And Nicole, it's interesting because the joke out here in California is, when do people buy earthquake insurance? Right after
an earthquake. I'm like, I think exactly. I know the punchline.
Yeah. So, and so a lot of clients over the last couple of years, they've seen this massive increase in their premiums. I mean, especially out here in California, we're talking 2, 3, 4, sometimes 500% increases in just a few amount of years. And so a lot of clients, it's like, well, I have a $10 million home and they're charging me $200,000 for that home. Well, what if I self-insure and I spend that $200,000 to invest in protecting my home? Right. So let's put some, let's remove some landscaping. Let's remove some cypress trees up against the home. Let's, put in some special vents to prevent embers from coming inside the home. Let's look at water cannons. Let's look at, self-deploying FOSS-check system on my home. So they would rather spend that money in protecting their home versus the full insurance. Now, the downside to that is that when you've got such a horrific catastrophe like we just had with the Pacific Palisades, many people did not think that their home would burn down. Wow. And they gambled, right? Yeah. And, 9 out of 10 times, maybe they win. But that one time when they come up cat's eyes, those are the people that are really going to be suffering right now. And there's very limited help that you get from the government. Some people are looking to charities and other private institutions to kind of build their life back. But it's a very unfortunate circumstance that a lot of people were left some people chose to be uninsured. Other people lost their insurance, right? And we're starting to see an increase of that as well. And I feel bad because there's been so much misinformation over the last couple of weeks about insurance. And it's easy to beat up on the insurance companies, right? Because they're these multi-billion-dollar organizations that are publicly traded. And you see their commercials on TV, right? You can't turn on a football game, a baseball game, a basketball game without seeing some insurance commercial. And so people's perspective is like, well, why are they dropping me? They make billions of dollars a year. And the fact of the matter is that not all locations across the country are created equal. Particularly out here in California, a lot of insurance carriers lost money for several years in a row. For every dollar they were spending out here, they were losing between 7 and 9 cents. Well, that's not really a value proposition. That's not a viable business,
right? If
you're losing money year in and year out. So people carriers started to flee because they could not charge an appropriate amount of insurance premium. And unfortunately, in our business, we have what's called actuarials. So you can see they actually knew and could predict these losses from happening. And so these insurance carriers are like, well, we see a potential loss here, so we are not going to insure your location. And people are left, well, what do I do now?
Right.
Right. And out here in California, we have a carrier of last resort called the California Fair Plan that a lot of people went to. It's substandard. I mean, it's bottom of the barrel insurance, but that's all they could get. And other people chose not to insure. And those are the people that I feel absolutely terrible about, because right now they're trying to rebuild their lives as much as possible.
Yeah. And that, I think, it's going to be interesting to see how your industry does continue to evolve, because I don't, certainly we've highlighted the preventative or, things you can do to hopefully prevent or reduce the loss. But as you just shared, not everyone's going to subscribe to that. And then I think just like the world evolves around us, I think these natural disasters are going to continue to evolve and change as well. So,
I mean, I don't think that we're going to have any fewer polar vortexes,
right?
Bomb cyclones, whatever you want to call them,
right?
Fewer hurricanes, fewer, wildfires. The only thing we can do is better prepare ourselves for those catastrophes.
Yeah.
I think we're going to continue to see flooding, which is a huge. It's probably one of the largest uninsured risks right now in the country.
Wow.
That people are facing. They figure, I'm not in a flood zone. I don't need flood insurance. Well, most floods happen outside of a flood zone. So those people, again, could be potentially uninsured. So
yeah,
if there's one glimmer of hope, is that it's not too late to review what you have, to have a conversation. Again, time to have a conversation isn't after a loss, it's before the loss. So
right.
Let's look at your coverages. Let's look at your deductibles. Maybe there's some additional products and services that we can include and increase your deductible, so we are improving your total insurance spend. And that's something that people could and should take to heart.
Yeah, all good points. So before we wrap up, is there any do you have either of you have a key takeaway, or was there anything you either wanted to reiterate so our listeners understand this is the most important point, or just anything kind of that our listeners should really take away from our conversation today?
Yeah. I think I'm going to piggyback on Tyler. No longer is it, let me look at my insurance and try to nitpick it to save money. It's really not the right way to look at what insurance is doing for you. It's a product that we hope you never use, and you're going to pay for it. And that's frustrating for people. But when we see the other end and the claim has happened, and we have people whose lives are basically put back together as best as possible in most situations, then they would pay all that money all over again without question. And we hope that people see the value in these reviews and thinking about a way that you can use your insurance in a smart manner, the way you use deductibles, self-insurance tools. We obviously don't want people to overpay for their insurance. So we're going to look for what the best option is, but it's not a where can I cut and pick here and there, which we see a lot. It's more just, I want the best program for my family, myself, to rebuild us if we ever need it.
And I'll conclude with, our industry has gone through some enormous changes over the last couple of years, and most people have been disrupted with their insurance. Right. And
right.
Unfortunately, not all insurance is created equal. It really isn't. And so I think there's a moment where you take a step back and look, okay, this is something that I need to purchase. Let's not purchase the bottom of the barrel, the least expensive policy to just get me through the day. Mm-hmm. Because, there is nothing more heart-wrenching than being on the phone with a client as they watch their home burn on their Ring camera. Right? To kind of go through that with the client, right? There's nothing more heart-wrenching than that. But on the flip side, there's nothing more rewarding to let a client know that they've purchased the right amount of coverage with a very good carrier that's going to get them back on their feet, so they have a place to stay. They can go out and acquire more personal possessions, and they can get their life back on track. So for our part, that's something that is very rewarding. And when you tell clients that there is a better way, and we want to educate the marketplace that, talk to your provider, talk to your insurance broker, review coverages, see what is in the best interest of you and your families to protect them and your loved ones.
Yeah, all good points. So certainly timely given what is going on in California. But even if we're not, a part of the world or part of the country is not experiencing a natural disaster at the moment, I do want to just reinforce for all our listeners that it is, as Tyler said, the best time is before you need it. So lots of things to consider. It certainly has changed. I know certainly since I started needing insurance, it has evolved and changed. And really, I will say the devil is in the details with your policies. So definitely take the time to talk with a live person who can ask you the questions that you may not even know to ask or think of. And then how does it apply to what you're trying to accomplish? So thank you. If any of our listeners want to get in touch with either of you, what's the best way to do so?
I'll give my email address, which is Courtney, Courtney .Eber, EBER, at Alliant, ALLIANT.com. And phone number is 312-489-9200. That's actually my direct line, which is a shockingly good number. But, feel free to reach out and we can certainly get you to the right place and do a complimentary review of your coverage.
And we also have a website, alliantprivateclient.com, and we are very active on LinkedIn. So if you are a LinkedIn subscriber, I would say just go on to the Alliant Private Client LinkedIn page, click follow, and you'll see lots of information about our industry and what's going on. We post 2 to 3 times a week. We're very active there. So it's a good place to get a lot of information.
All right. Insurance conversations are not conversations people want to have too often.
No.
Unfortunately, as this conversation bears out, they're conversations that you really do need to have. So I would encourage anybody who's listening to this to heed the really solid advice. Don't wait till your house burns down to decide you need to buy fire insurance. It's not going to work out for you.
This is pretty basic stuff, guys, but you'd be surprised. I mean, and honestly, like the worst people are people in our own industry. Like they never look at their insurance policy and they're always looking to cut corners. So I get it. But I think that's changing. I think people are realizing now, especially after all these claims, particularly with State Farm, which are going, I have 3 calls set up today where people are so frustrated. They can't get a hold of anyone at State Farm. They don't know what to do. And we are trying to be a resource and help people navigate the craziness of going through a total loss. So
yeah, terrible.
It is bad. Well, the listeners, you have heard how to get a hold of either Courtney or Tyler. The information's in the show notes. If you were listening and you weren't able to write it down, you can refer to it when you get to a place that you can get a pen and paper. Nicole, how do they get a hold of you if they're listening to this and they are not already in a relationship with you? How do they reach out to you and maybe talk to you about their financial needs and what you might be able to help them with?
Sure. The best way I would say would be through our website, which is myprivatevista.com. And on our homepage, there's a contact us button. You can put in your information, reference this podcast episode, and either myself or one of my fabulous colleagues will reach out. If you prefer to call, you can call 312-831-4370, and our receptionist can connect you with me or one of my colleagues.
Fantastic. The other thing you can do if you're listening to this podcast and you are not already a subscriber, become a subscriber. That's easy. Hit the subscribe button, hit the follow button. That's the easiest thing you can do in this entire podcast, as a matter of fact.
That's true.
That way, then if you're a subscriber, you're notified when a new edition of this podcast drops and you can give it a listen. The other thing I would encourage you to do is if you find this information useful, if you find it helpful, if you find it of value to you, tell people about it. Word of mouth promotion is a welcome and effective tool of promotion, and we would very much appreciate it. Until next time, I'm Bill Tucker. On behalf of Nicole and everybody at My Private Vista, thank you so much for taking the time to listen today. And I will remind you as we go out, you can go out today and have a great day or not. The choice is up to you. Use it wisely. Until next time.
Thank you for listening to the Dollars and Cents Creating Your Fulfilled Life with Nicole Romito, sponsored by Private Vista. Visit our website at www.myprivatevista.com or give us a call at 312-831-4370. And don't forget to click the follow button to be notified when new episodes become available. Private Vista is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is neither indicative nor a guarantee of future results. The investment opportunities referenced herein may not be suitable for all investors. All data or other information referenced herein is from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other data or information contained in this presentation is provided as general market commentary and does not constitute investment advice. Private Vista and Hightower Advisors, LLC, or any of its affiliates make no representations or warranties expressed or implied as to the accuracy or completeness of the information or for statements or errors or omissions, or results obtained from the use of this information. Private Vista and Hightower Advisors, LLC assume no liability for action made or taken in reliance on or relating in any way to this information. The information is provided as of the date referenced. Such data and other information are subject to changes without notice. This was created for informational purposes only. The opinions expressed herein are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates.